Welcome everyone to the BBA Show, episode 3. This is AKW Analytics, aka Adam Wyatt, and I'm here with Rich. And today we will be talking about Bitcoin, just the node summary, and a little bit about prices, fiat currencies, and some global macro stuff, negative interest rates, and central bank talk. And then we will move on to gold, which has had an interesting move recently. So first of all, I'm just going to start off with the Bitcoin node summary. So last week we touched on Hearn, his exit, and what that could mean potentially going forward. Over the past week, I personally have observed the rhetoric being toned down, communication channels being opened via Slack, productive talks, and a reduction in the severity of that kind of personal stuff that we had been hearing before. So all that is pretty good news in my opinion, but what ultimately counts is essentially nodes that will vote for these different software client implementations, and eventually, if there's a fork. But up until then, we're just kind of waiting around here. But as you can see, I like this site CoinDance. It gives a pretty good summary of the nodes, and you can see that that XT nodes have slowly been falling, but those have been moving over to unlimited and classic nodes, and core nodes have been dropping, but not very much. But what is interesting to me is that over the past couple days, this category here, this other category right here, 89 nodes now, has come out of nowhere, and I'm not really sure what those are. They're not identified. What my guess is that if we scroll all the way down here, here's all the kind of the binaries that you can run for the different Bitcoin implementations using Bitcoin BTCD, Classic, Unlimited, Core. So it might be a combination of some of these less known implementations down here that are soaking up some of those other nodes that were either leaving XT or migrating over a couple from Core. So anyway, we'll see how this continues to play out. But right now, Core is in the lead, and at the peak of kind of the Bitcoin XT talk a month or two ago, we still didn't believe there was going to be a hard fork, but it looked like at least a decent probability with almost 1,000 nodes they had at one point, as you can see down here. Classic, given they just released their binaries with 63 nodes, I mean, this isn't even on the radar at this point. So it's all talk, which leads into our next segment here, which is just a price chart, 2-hour chart, downtrend intact. We can see we're in a triangle here, and as you can see, as the rhetoric again has died down and the communications opened up, we can see prices starting to flatten out here. If we break above this trend line, we might have some little FOMO action up into here, but until then, we're just still chopping around. So with that, we'll get to some global macro stuff. Rich, what do you got for us?
Well, thanks for that little report there, Adam. I like to hear that the volatility is starting to die down a little bit. It's always nice to not be riding a roller coaster on a day in, day out basis.
True.
Yeah. Yeah. So I wanted to talk about today. First of all, I want to talk about. Let's start with Europe, specifically these European banks. I'm going to share my screen here. Tell me if you can see it. Let's see. Okay, can you see this?
Yep.
All right, so here's what we're looking at. This is a chart for Deutsche Bank over, let's see, it's a daily chart. Let me just do for the year, 1 year chart. Yeah, so that's what we're at. So we've got right here this just tremendous puke. Like it's just melting down, right? Like that's huge. And we're starting to see a trend of these bank meltdowns in the European Union through several different banks. So this is Deutsche Bank, and people like Raoul Pal, even Max Kaiser, they've been talking about Deutsche Bank for a couple of years now, that there's just no way that they can stay afloat, and predicting prices go to zero, which is bankruptcy. Let's see.
Yeah,
There was
Raul's the man.
Yeah, definitely. I love Raul. I'm a big fan of his. So we got Deutsche Bank. Let's look at Credit Suisse. A very similar looking chart pattern, right? Just getting crushed down. This line right here is that's and there's gonna be little blips. Like even today there was like a little blip up, but these are not indicative of any trend reversals. This is the massive trend in play, not this stuff here or this stuff here. This is the massive trend, and it's only going to continue to go down. I don't think there's a way out short of recapitalizing the banks. And then Santander, a Spanish bank, I believe, Spanish or Italian. I'm blanking right now, but
they're Spanish bank, I think.
Yes, Spain. Right. So another similar looking meltdown pattern. So I don't see the end in sight for this short of zero. I mean, maybe we get a little bit of recoveries here and there, but like I heard Raul Powell actually say today on a CNBC report, take those opportunities to get short even bigger. Like an opportunity like here where it popped back up, get short again, because these things, it could be the end of those.
So what are these stocks trying to tell us about the global economy?
That liquidity is drying up, that that all the money that's been printed into the system is finally just been basically it's just been soaked up into the system. There's nothing left. Banks aren't able to lend. Nobody's borrowing. And it's just like there's no equity left in the banks either. Everything is so highly leveraged that they're not making any money, and basically they're just collapsing. I mean, that's the issue with liquidity here, is that it's drying up, so there's nothing left to do, short of printing more money.
Right. So that's what Japan is doing, right?
Well, not yet. I mean, like we'll switch to Japan really quick here. I wanted to share a tweet from Alex Gurevich. So we're talking about Japan. Japan just announced negative interest rate policy. So they're going negative. So they're the second major economy to go negative. The European Union's already gone negative, and now Japan's gone negative. So I wanted to share a tweet here from Alex Gurevich. He's a portfolio manager at Honti Investments. I'm a big fan of his. He's got a great book out. It's called The Next Perfect Trade. If you get a chance, read that. Anyway, so his tweet: yes, negative interest rate policies serve to weaken the currency, but not increase liquidity, right? So that's the problem. It's not increasing the liquidity. So it doesn't matter, right? It's short of printing more and more money, they're not going to be able to get the liquidity they need for inflation. So perhaps they get a weaker currency, but that's not going to drive the inflation that they need, because people still aren't going to be able to borrow and spend, because the overall economy is still lacking liquidity and therefore in shambles pretty much. I mean, that's
So doesn't that mean more of the same? Because Japan's been in this stagflationary environment for decades. So does that just mean more of that, or
yes,
I believe is this an end game? Is this going to get worse in some sense?
I think that you get it's sort of like a like have you, I don't know, maybe this isn't an analogy that you'll get. Have you heard of the euthanasia roller coaster?
Probably.
It's like the idea is that if you want to die in a fun way, if you want to commit suicide in a fun way, you hop on this roller coaster and you take a trip, and it just gets in infinitely tighter loops until like the loops are so tight that it flatlines and then you're dead, right? Because by that point the centrifugal force is taken, like basically you pass out and then you stay unconscious until you're dead.
Okay.
So if you could think about QE like that, the idea is that you get results in the beginning, but then they start to fade off. So you need more, and you get smaller and smaller and smaller results until you flatline, and then you're just done.
Okay, so so you need to add QE onto that to try to provide liquidity then, right?
Oh, absolutely. The negative interest rates are just gonna. There was another tweet I wanted to share. Let me see if I can see that. Yeah, like look, NERP creates a better funding rate for JGBs and makes them more, not less attractive. I mean, this is going to be the case for JGBs, but it's also people are just going to take their money to other bonds too. I mean, if there's no interest in Japan that people can, like if there's no yields, then they're going to go somewhere where they can get yields. I mean, look at, U.S. Treasuries or, I mean, bonds right now are negative yield, so there's not much there. I mean, but I don't think that's going to stop people. If
aren't JGBs like, isn't it kind of a unique market because it's pretty insular in that the government and the public ends up soaking up most of those bonds that are issued in the end, like 90% of them? So there's not like, it's not like they don't have a lot of FDI or foreign direct investment in their treasury market, I don't think. Some, maybe like 10 to 15%, but I think, again, it's a pretty insular treasury market in that most of it's purchased by corporations or governments or individuals in Japan are buying those bonds. So it's maybe
that's true.
Maybe the effects of this can be a little more contained. Whereas if you start doing, if this kind of thing gets out of control in Europe, it's contagious, or in the U.S., then the whole world's in trouble. Yeah,
but if you take, like even in Japan, those people that you're talking about who like it's kind of insulary, right? You've got the corporations or even just the government or the private citizens, they're the ones buying the JGBs, but it doesn't really matter, right? Like at that point, they're not getting their end goal. Kuroda's end goal is inflation, and yet they're continuing to get the deflationary pattern, right? So people are just going to keep moving into the JGBs despite the fact that it's the negative interest rate policy, because there's still no liquidity. And then that's only going to make liquidity worse when people are driven into the JGBs, right? Because then there's, the cash is being positioned in bonds and not the market.
Sure.
You see what I'm saying?
Yeah.
So you continue that deflationary pattern. But yeah, I mean, it's this is the sort of end game, right? Like other countries are going to start to kind of emulate this. Like Japan has been heralded as the leader in QE, right? And I think they do eventually ramp up the QE here.
Yeah.
But they've been sort of the like, well, look, there's no negative effects, so we should be doing that stuff too. And that's just gonna, I mean, that just flatlines, right? Like that's the euthanasia roller coaster where we eventually get the flat line in the world economy.
Yeah.
I think, I don't know if there's a way out from this, really.
Yeah. And so, and that's kind of a way out, maybe gold, which we'll get to in 1 second. But just real quick to kind of wrap this up, today the dollar got smacked low.
Yes.
I mean, just obliterate. Like it was down like a 1.5%.
1.5%. Yeah. Yeah. It actually broke
deviation event, right? So what is that to me, it looked like just a stop run puke before we run higher. I mean, this is indicative of a bull market correction. They're really incredibly nasty, but really quick. And then they rebound pretty fast. So if this thing rebounds the next couple of days, I'd look for it to push through 100. But and I also got short oil again up around the highs at 32.50 or so, because these moves are so classic counter trend moves that I just don't think it lasts. But maybe I'm wrong, and maybe it is a real reversal. What do you think?
I totally agree with your first part, because if you look at where did that money go? Well, it went out of dollar and into euro and yen, right? The yen recovered all that it lost against the dollar when they announced the negative interest rate policies, which was like down from 125 down to 117, I think, today. And then the euro climbed as high as, I think, 1.11.
11, yeah. Yeah,
so, I mean, that is the antithesis of what Draghi wants, of what Kuroda wants. They think that weaker currency equals inflation, so they're going to do everything they can to devalue their currencies, because in some insane world, inflation is healthy. So they're pushing for those things. And now that the euro is appreciating against the dollar, it's putting more pressure on Draghi to increase the QE program, which eventually I think we see parity in the dollar and the euro after they increase the QE program. And eventually I think we could see $1 to 80.8 euros.
Yeah. Well,
that's kind of my target.
That would be an incredible trade. Fundamentally, I completely agree. But this is, I feel like maybe for our average listener, this is this is why most people don't trade Forex, because it's convoluted and it's confusing, right? It's like,
right.
So we've just been talking for the past 10 minutes, and as an average investor, I go, okay, so what do I do? What does that mean? So at that point, I get, that's when I start looking at this gold chart, and you go, okay, well, gold has traditionally been a hedge against inflation, people say, but that's such a U.S. kind of Western centric view. Inflation in what currency? That's my question. And so I think, but gold is becoming, because we have all this confusion, gold is slowly becoming something that maybe makes a little bit more sense to people outside of the context of these currency wars and negative interest rates. And people go, what the hell does all this mean? I don't understand any of this. Why is my currency fluctuating so much? And then you look at gold and you go, oh, wow, okay, I can own a couple of gold coins, put them in a safe. It makes me feel good at night. At least I can sleep.
Yeah.
So anyway, and I really like this chart. I mean, this bottom is beautiful. This nice rounded bottom, little W formation here with the confirmed reversals and a breakout above trend. This trend line actually, if you extend it back out on a weekly chart, goes back even further. And the break above the 200-day here, and now we're targeting the OTE and this supply area and SCMR dynamic resistance. All of this kind of converging right here around this 1180, 1185 area. So in the short term, this thing, in my opinion, no matter what any central bank does or the stock market does or oil does, it doesn't matter. This thing is going higher. Technically, it's targeting, again, this 1185 area. Maybe you get up to 1200, but it's a sell there in the short term. What we really want to see is, again, this top out right here. That would be the handle. A short, small pullback, maybe to 1120, 1100. As our cup. This would be our cup. That would be our handle, and then boom, maybe latter half of 2016 and 2017, when things start to get really hairy in the financial markets, then gold might actually break out of this bear consolidation we've been in for 5 years and actually make a run at the highs again, which would be very interesting. So anyway, I like gold here. I like gold as a long-term hedge and insurance policy anyway. I think everybody should own some. So anyway, that's my view on gold. Buy it up to there and then wait for a pullback and then buy it again.
Yeah, I agree. And in an environment when you're seeing gold and the dollar rise, which I think we're going to see, I mean, that's a very rare occasion. And yet I think we're in an environment that's ripe for that. That really is telling, right? The environment that we're living in is so volatile, and we've gotten away from the real market mechanisms, and now we're so reliant upon central banks, and we're starting to see that sort of crack open and be revealed for what it is, which is a sham. You start to see some really crazy stuff happening, and just to kind of add to that, and I'm not sure if you guys agree or if you would be willing to say like, oh yeah, maybe look at this too. But I'm looking at the 10-year yields, 10-year treasuries, the U.S. treasuries. The yield is looking ready to right here. I'm looking at this area. If we crush below this line here, I think we could easily go to 1.5, if not even lower. Maybe by the end of this year, possibly 0.5% yields. That's a pretty big move, and maybe there's some safe haven status in there temporarily, and until even the dollar gets flushed out, which I do think is a little ways down the road. I think for now we're going to continue the dollar appreciation and the sort of deflationary environment in the world, and while we're riding that train, this is probably the safest place to be, other than gold, and even I'd say silver. Yeah, I mean that's my opinion. What do you think, Adam?
Yeah, no, I agree. I like bonds too. I like treasuries here. I think they have to go lower just to maintain risk spreads, yield differentials with Boons and JGBs, just to, again, to keep the appearance of credit markets functioning properly. And so even if, let's say, like you said, it stops becoming, for some reason, a safe haven, I still think there's a bid there just by arbitrageurs needing to keep these spreads in line, especially as Boons and JGBs go pretty sharply negative here. So yeah, go, buy some gold, buy some silver, buy some treasuries for now, and buy some guns and buy some dry food, some bullets, and hunker under your bed for 6 to 12 months, and then maybe come out and check it out in a year or two.
Yeah, poke your head out and see what's the fallout like.
Yeah, when all the banks have gone to zero, then then we're through it.
Well, and if you're holding Bitcoin, I mean, that should be the inverse of the banks, right? I'm hoping as they go to zero, we go to infinity.
Yeah, and Bitcoin. Bitcoin actually, it's interesting you mentioned that. Bitcoin does not keep correlations with any other asset on. So I mean, if you want an uncorrelated asset, go buy some Bitcoins. That doesn't mean it's gonna be good all the time. It's gonna go in the right direction wherever you want it to, but it will not act like you think it will. So go buy some of that if you want to throw a little something in your portfolio.
Exactly.
All right, cool, Rich. Well, we appreciate having you on again. It was great as usual. Everybody can visit bullbearanalytics.com for more information about what we do, the analysis we do, and the markets we cover, and the services we provide. And everybody, if you could subscribe to the YouTube channel to show some support, that would be great. So everybody have a great evening. Rich, you as well, and we'll see you next time.
Thanks, Adam. Take care.
Cheers, Rich.